Hello, it's Clark Kendall, Kendall Capital, June 21st, 2022. It's been a while since we've talked directly to you one-on-one about what's going on in the financial markets, but to say the least, a 20% stock market drop, we thought it was a great opportunity to just touch base with you. Really what's driven this market has been the unexpected inflation that's come to the financial markets. We've video blogged about it, wrote about it in our newsletter, that when Jerome Powell stated back in the fall that we went from transitory inflation to infrastructure inflation, we stepped up and started realigning some of the accounts. One of the first things we did was to make sure each one of our clients, you all, had short-term investment products to meet your short-term needs. Carol, myself, Brian, Jason, and Zeman, many times we switch clients to that inflation protection to meet your short-term needs. We've also been very adamant about, we call it the income and growth stocks, kind of those dividend-paying stocks. Relative to the market, they've held up quite well. We're proud about that. On the long-term strategies that we employ, such as the fund and mutual funds, we've moved us from some of the high growth mutual funds into more value-based strategies, and that's worked quite well. In the GARP portfolio, which stands for growth at a reasonable price, we've really emphasized reasonable price. Many of the companies in our portfolio are good companies, but we're trading in hefty premiums, and we went through in a prudent fashion and trimmed back those holdings. Over the last several months, we've actually gone what I call employing financial planning opportunities in the marketplace. And the first thing we've done is done the tax harvesting. I always use the example of selling Coke and buying Pepsi. Even though Coke is down, we'll turn around and buy Pepsi. We really don't own Coke and Pepsi in the portfolios, but I use it as a name that we know and recognize. We've also talked to many of you about, just on a normal annual basis, about doing Roth conversions, moving pre-tax dollar investments into Roth accounts, going through the income tax loop. Now, when your accounts are down, 20%, it's a great opportunity. And the third thing is, employing that simple strategy that many of you accumulated the wealth, is dollar cost averaging. And really, dollar cost averaging works quite well with the most volatile strategies, such as the microcap and the international 60-40. So we continue to employ those strategies for you to meet your long-term goals. Long and short of it, bear markets happen. On average, over the last 100 years, they've happened about once every 6 years for the market to drop more than 20%. In some respects, I think what we're trying to do is take advantage of it, to use these strategies for your benefit to meet your long-term goals. And I also like to keep in the back of my mind that how long do bear markets last? On average, they only last about 9.5 months. Usually between 6 and 18 months is the average duration of a bear market. So we're managing through it. Some people consider this a rainstorm and hide during the rainstorm. I look at it as an opportunity to dance in the rain and take advantage of what's going on. As always, please don't hesitate to call or write Carol, Brian, Jason, Zeman, or I. We're here to help you